Thank you. And turn on captions. Okay. Thanks everyone for coming. I'll call this meeting to order at 10:05 a.m. First, start out with the territorial acknowledgement. We respectfully acknowledge that the SFSS is located on the traditional and ceded territories of the Coast Salish peoples, including the Musqueam, Squamish, Tsleil-Waututh, Coquitlam, Katzie nations. Unceded means that these territories have never been handed over, sold, or given up by these nations, and we're currently situated on occupied territories. And also, please think about, since we are in a virtual meeting today, that we all might be in from different territories, and just please keep that in your mind when we are making decisions today. Okay. Start with roll call. I'm Chair, VP Finance, Corporate Gildersleeve. My pronouns are he, him, his, and my access needs are all met. VP Student Life.
Hi, I'm Jennifer. Pronouns are she, her, and my access needs are met.
Thank you. Applied Science Representative.
Hello everyone. My name is Harry. My pronouns are he, him, his, and my access needs are met.
Thank you. Business Representative.
Hi guys, my name is Maytab. I'm the business rep. My pronouns are he, him, his, and my access needs are met.
Okay, thank you. At-large representative.
Hi, my name is Pooh. My pronouns are he, him, his. I have a doctor's appointment, actually. I'm sorry I scheduled it during this time, but scheduling is a pain. Like it was either today or like next Thursday, which is ridiculous. So I might have to leave in about 30 minutes.
Okay, thank you for the heads up. Student at large, Ahmed. Saw him pop in. You're muted.
Hi, sorry. My name's Ahmed. My pronouns are he, him, and his, and my access needs are met. Thank you.
Okay, thank you. And as no Pardio is wasn't able to make it today, so just send in regrets. We have staff here with us. Lawrence, our transition manager.
My name is Lawrence. Pronouns are he, him, his. Access needs are met, and I'm working on the Coquitlam Band Nation territory.
Thank you. We have two financial coordinators, Kurt and David. Kurt, would you like to please introduce yourself?
Yes, present.
Okay. David.
Hi, I'm David. Pronouns he and his. SS needs met.
Thank you. And we have two guests. Oh, awesome. Please introduce yourself.
Hi, everyone. My name is Asab. My pronouns are she, her, and hers, and all my access needs have been met.
Thanks. Go through. Now we have two guests here, our auditors. Gary, would you please introduce yourself?
Good morning, Gary Wozni, partner, Tompkins Wozni, LLP.
Thank you. And Pamela?
Hi, yes, I'm Pamela Felix. I work with Gary at Tompkins Wozni, and I was the auditor on the job, the senior auditor on it.
Thank you for both attending. Okay, so we'll move on to item 2, adoption of the agenda. Motion, be it resolved to adopt the agenda as presented. Do I have a mover?
I'll move it.
Do we have a seconder?
Jennifer seconds.
Thank you. Harry moved. Jen. Do we have any amendments to this agenda? Okay, I'd like to amend to include a section for ratification of regrets for Apario. That would be, it's not normally in our section, but yeah, I'll have to put it in under summer. We'll have that sorted out in the agenda in minutes later down the road, but that'll be after this section. Okay. Do any other amendments? No? Okay. So do I have a mover for, or rather I can move the amendment to a ratification section. Do I have a seconder?
I'll second.
Okay, thank you. All in favor of amending the agenda as presented? Seeking unanimous consent. I see no opposition. Okay, thank you. That is moved. Okay, moving on. So now we'll do a ratification of regrets. Be all in favor to ratify the regrets for Paria Sahi. Apologize for the mispronunciation. Do I have a mover? Anyone? Do I have a mover?
Jennifer moves.
Seconder?
I'll second.
Thank you. Just to give some feedback, Arya had a work conflict today. So all in favor of approving Arya's regrets? Seeking unanimous consent. If you want to dissent, please unmute your mic. Seeing no dissent, this carries unanimously. Thank you. Moving on to 5.1 matters arising from the minutes. Be resolved to receive and file the following minutes. Oh, sorry, this is an older agenda. We won't have any minutes to file. So move on to 6, which is annual plan and audit and then the next one will be audit statements. Annual plan, I recommend we go through this first so then we can spend the majority of our time, remaining other time on the audit, the financial statements, draft financial statements. Okay, so excuse me, I'm a little bit rusty on chairing. Draft agenda. Okay, so let's start the discussion on the FASC annual plan. I sent this out ahead of time to committee. I'm hoping everyone has had a chance to at least glance through it. It's pretty much the same as what we discussed last meeting, but just a little bit more detail and just a little bit more formal structure. So the goal is to discuss this and approve this plan to be recommended to the board. Okay. So, is there any questions or concerns about this report that I drafted up? Is there anything you think is missing, or any projects that you thought that we've over the last month or so, or since the last time we met, which has been about a month, has there been any new things pop up that you think is important for us to try to get worked on this year? Seeing no comments or no additions, I'd like to move to amend the agenda. Sorry, I forgot to do this early on. To add a motion for the committee to recommend this plan to the board for approval. Do I have a mover? I'll move that. Do I have a seconder?
I'll second.
Thank you, Harry. Any last minute discussion? Nope. Seeing none. Okay, I'll move this to a vote. All in favor of amending the agenda to include the motion for the FASC committee to recommend this annual report to the board of directors for approval. All in favor? Seeing no dissent. Carries unanimously. Now we'll vote on the actual motion. Sorry about this. All in favor of passing this, to recommend this motion, sorry, this plan to the Board of Directors for approval. All in favor? Seeing no dissent, that carries. Thank you very much. Okay, now on to the next item, draft financial statements for the 2019-2020 fiscal year. Okay, what I probably would like to do is give the floor to Gary and Pamela to talk about this process and the reports, and we can go through the findings. I believe Gary sent a rough agenda with us for items to go through. I just wanted to bring that up, so I have something to follow on. Yeah, so please find attached for, so we have the draft financial statements agenda for the meeting, and the health dental plan reserve calculation attachment, draft audits for finding letter, draft trial balance and adjusting journal entries, and draft revenue and expense groupings. So Gary or Pamela, would you like to take over? And
yes, that's good, Corbett. Thank you. So I presume everyone got the package. The draft statements are quite substantial. As you well know, the society has got a lot going on, at least financially. So is there a way to do a share screen?
Yes. You should be, I'm not sure what you have, but for me, I have a little like 3 dots in the top right corner that I want to
Pamela,
click on.
can you maybe do that?
I'll see if I can figure that out.
Okay. That might make it easier, given the
Top,
time constraint.
top right corner.
For me, I'm on a mobile, so it might be different if you're on a desktop.
Yeah, no, yeah, I'm on a desktop. Yeah, my 3 dots are for the Internet Explorer option here, and it doesn't give me a share screen.
If you get the
I'd say
white,
present now.
right,
Oh,
yeah.
Yeah, there's a present now option in the bottom right.
gotcha. I see. Yeah, there we go. Let's go to, so, yeah, okay, let's try that.
Good. Excellent.
Okay.
So can everyone see that?
I can see that.
Perfect. So we're going to run through everything with you folks. As always keep in mind that these are your financial statements, i.e. the Student Society. Something doesn't make sense, this is the time to talk, bring that up. What is ours is the independent auditor's report. So we'll try to move through. The numbers are quite substantial, so we'll be doing some rounding in general terms. And as in the past, you can see there's several funds. You folks follow what we call the fund accounting. There's a general fund where the day-to-day operations takes place, a capital asset fund where the current furniture and equipment and interest in the Maggie Benston building is on the accounts. The build SFU relates to the construction, which is almost done, we understand. Space expansion is space expansion. The undergraduate health plan, First Nation student fund, and the accessibility fund. We're going to generally work off the totals, and then we'll make references to some of the larger items from there. So starting through the total columns, you can see at the end of the year, there's total cash in the various bank accounts, $11.4 million. A little bit of accounts receivable, $52,900. I think almost all of them are received after the year. Some is due from Simon Fraser, and that typically takes a while to come in, but I don't think you've ever had a bad debt with them. Prepaids, the biggest item, that $1.657 million, is related to your prepaid premiums in the undergraduate health plan. And that's because the plan runs on an August 31st year rather than your fiscal year of April 30th. The cash held in trust, the 8.52 million, is part of your arrangement with the university. It all relates to Build SFU, and funds go directly there. And then, of course, as the costs are approved, those amounts are, that cash is used to pay those amounts to the construction people and so on. And some of the debt is also paid through there and the related interest. Tangible capital assets, 2.45 million. The amounts that are used in the day-to-day activities are in the capital asset fund, the 937,601. And about 1.2 million was bought, furniture and equipment related to Build SFU, but of course that's not put in to operation yet. So it just sits in Build SFU and it's not amortized income because it's not in use. And then the big item carrying on with the totals, 49.7 million, is all the development costs and construction costs to date. And all the direct costs are included in that figure since the project started, as well as the finance and interest costs. And then a little bit of intangible assets, $10 million, $10,000, beg your pardon. So you can see the assets are getting very substantial, 73 million of assets. Liabilities, the bank loan, that's the current portion. During the year, you altered your agreement with the bank. So now about $83,000 a month gets paid on the principal of the loan, and the $1 million is what will be paid on or before or by the end of April 30, 2021. The accounts payable, 6.7 million in round terms. The biggest item, of course, relates to Build SFU, which is pretty normal given the construction process, 5.159 million. And this year, a little bit more in the undergraduate health plan. There's the usual premiums that were due, about 470,000, I believe. But then because you folks, the type of policy that you have, there's an additional 691,000 that just came in recently, and that has to be accrued because it relates to the year end. And then finally, you have 1.736 of deferred revenue. This is mostly related to the health plan, again, because of the timing of funds going in and out, and this will be revenue in fiscal 2021. So the total current liabilities, 9.432 million. And then the rest of your bank loan at that point in time, 34,900,000. And then an item that has been around since the Build SFU started in the agreement with the university, this partial surrender of leased premises, the 3.5 million. When you move into the building this next fiscal year, that will be the proceeds for the space that you give up. And we anticipate there'll be quite a big gain on the books. Next year, we think the carrying value is probably $700,000 or $800,000 in round terms. So the difference between that and the 3.5 million will be a gain that will go into your income statement in fiscal 2021. So you can see the total liabilities have increased to 47,800,000, but that would be expected. Then you have a whole bunch of different fund balances. You can see the totals that go across, but you can see the internally restricted 6.5 million that are used for those specific funds. The future contingency reserve that got put in, I think 2 or 3 years ago at 650,000. Your equity and capital assets, 15.822 million. And then your unrestricted, which is your pot for your day-to-day activities, 2.75 million. So you can see overall the fund balances or overall equity has increased from 21,442,000 to 25,733,000, which is an increase of about 4.29 million. So that means you have increased or bettered your financial position as compared to the prior fiscal year. So we're just going to turn the page, please, Pamela, to the statement of operations and change in fund balances. And this statement sets out your revenue and expenses for the year in the different funds. And it also sets out what we call some interfund transfers down below that you're going to have to put through a couple board motions next Friday, as I think we believe is when the board meets. But we're going to highlight some of the amounts again. So if you look at the total activity fees and levies for the year, the top right total 12.8 million this year versus 11.8 last year. And that's basically because Fraser International in the prior fiscal year was just 4 months. This year it was 12 months. And Build SFU's fees increased January of 2020. So that hopefully generally explains the increase. Retail services, copy center was closed in fiscal 19. The general office will look but pretty similar, 63,000. The rental revenue similar, 71.7 versus 75.5. The GSS sharing revenue up a bit to 10,900. And then you have all those substantial amounts of cash balances. You were able to negotiate some rate of return with the bank. So you can see the interest did go up for the year because you had more cash, 282,000 versus 240,000. We should just make a quick note that the interest that relates to the bank account that's held in trust with Simon Fraser related to Build SFU, that interest doesn't go to income until the building is complete. It reduces the cost of the building, and that's the way the accounting policy works, as does the interest you incur. Finance construction adds to the cost. The interest income earned reduces the cost. Retail services, as we noted earlier, that was all closed up in the prior fiscal year. And then the various schedules, we're going to take a look in a moment in the respective schedules. Administration and financial office, 836,000. The GO, 444,000. Build SFU has some minor general period expenses, 23.5, and then the building operating costs. Now, we're still waiting on the final accounting of the operating costs from the university. Hopefully that comes in the next few days. I know both your finance people, David and Kurt, as well as Corbett, have been working very hard to get that information. So hopefully we get it at the latest early next week so we can update the statements and go from there. So carrying on with the expenditures, you can see activity and program expenditures, 6.438 million versus 5.57. Keep in mind the biggest item by far and away is the undergraduate health plan premiums, $5.4 million this year. And because of the top up of the plan, of the 692,000, the expenditures this year are much higher than they were typically, and that explains much of that increase. Then you have your discretionary grants for departmental student unions and clubs, pretty similar. You can see the department student unions down slightly to 125,200, clubs 221,000 versus 237. And then the student bursaries are important because this year fair amount was reallocated or added, I think. COVID had, what was it, about 350,000 of additional amounts between First Nations, Student Union, Fraser International, and then of course just the general fund also allocated those amounts, and those have been accrued and expensed in the accounts. Amortization, building and equipment, 208,000 non-cash. So your total expenses are higher, 8.946, but a good chunk of that is your undergraduate health plan. So the bottom line, 4.29 to the good, and that's why your equity went up. Your carry forward fund balance of 21.442 million to get your 25,733,000 at the bottom. Now, the one item we wanted to clarify, but with the health plan reserve, there's an annual transfer that usually goes from the health plan reserve to the general fund for the health reserve that sits in the general fund. But this year, because of that additional cost at the end of the year for 692,000, we understood that that was going to be in essence covered by the general fund in terms of equity and cash flow. The expense has to stay in the undergraduate health plan fund, which it does. And that's why it has the loss of 446,000. So that will be, those two items will need a board resolution next week. to make everything in place. And then you can see just quickly, if you look at the bottom where the total fund balances are, the general fund still has about 3.9 million in it, which is built up over the last 2 or 3 years, which is good, especially with COVID-19 going on. And then you can see the various fund balances or equity down below. Okay. I don't propose to go through the cash flow statement. It's very accounting-ish, for lack of a better word. If anybody has any specific questions, they can send us an email, call us. If anybody has a question at the board meeting or the AGM, they're more than happy to bring that up, and we'll be glad to address it. But we'll move on then.
Yeah, I do have a question, and maybe it's a good combination of you and our financial coordinators here. So part of my role, I get to see the bank statements every month, and I help with, sign off on reconciliation. One thing I've noticed with the health plan reserve and the our contingency reserve is that the bank statements are different than what I see in the audit for the end of April. For instance, the health plan reserve fund, the bank statements are like 1.6 million, but when I look through later on the subtables for it, on the audit, it's like $1 million. So I'm just wondering, do you know why that, either you, David, or Kurt, or the auditors know why there's that discrepancy?
We'd have to check, but the amounts in the bank accounts in note 3, I believe, are the correct bank balances.
Okay, I'll send you what I've got, and
sure.
Maybe we can sort out. Maybe I'm misreading or misunderstanding what I'm reading.
Well, that's a good point, Corbett, because one of the recommendations we make in our audit findings letter is that whatever the equity is, and the equity in both of those internally restricted amounts, contingency and health reserve, are quite a bit less than what appears to be in the cash bank accounts.
Yeah.
So it's a good idea to try within reason to keep those relatively similar, because it makes more sense.
Yeah.
But we'll follow up with you as soon as we're done. We'll send you what we have and then go from there. How's that?
I appreciate that. Thank you.
Good question.
Okay.
Okay. Yep. Then we're going to go to the notes, which are quite lengthy, but we're going to highlight some of them, and hopefully you've read them. If not, I would encourage you to read them on your own time. But to highlight some of the notes, note 1 is the background or nature of the organization. You are not-for-profit, but you're not a registered charity. That's important because you do have to file 2 income tax returns, a normal corporate tax return and an information return. And we've talked to the board a bit about this previously, but always be wary that the Canada Revenue Agency doesn't get too hung up with entities like yours, but always keep in the back of your mind that if you ever do get an income tax audit, they sometimes don't understand how student societies especially work. And the long story short is you got to be careful if you have a lot of excess funds built up that you have a plan how to spend them to meet your your organizational goals and so on.
Thank you.
So be careful of that.
Yeah, it's something I've been concerned about for a while, with a lot of our surpluses been building up over multiple years. Thank you.
Yeah, it's a good point. And then note 2, you follow what we call Canadian ASNPO, Accounting Standards for Not-for-Profit Organizations. We're not going to go through paragraph by paragraph. There's not a lot of estimates in your accounts, other than maybe the estimated useful life of your capital assets. We talked about that you use fund accounting, and all the general, the different funds are disclosed over the next page and a half.
Thank you.
Sorry it's so lengthy, but it is a big operation, so hopefully those make sense. If not, you let us know. And revenue recognition, you follow what we call the deferral method. Your student activity fees are your major revenues, and they're recognized over the academic term. And the health plan is recognized over the term of the plan, which is August 31st. And your other revenue, you don't have it from too many other sources, but if you do have a rental of a room or whatever, it's income when you rent the room out, and interest income is recorded over the terms of the underlying investment, we call it, which is generally the passage of time.
Okay.
Carrying on to the next page, a couple of the highlights. Financial instruments, they're mostly or all at amortized cost, we call them. Your financial instruments that are assets are cash held in trust, and receivables. You don't have much risk with receivables because you basically deal with the university. And the items that are liabilities that we'll look at shortly are your accounts payable and, of course, your bank loan. Tangible capital assets, it indicates how the assets are amortized, same as the intangible assets, the website, etc. Pretty straightforward. And then we talked earlier about the construction costs and how they get treated and capitalized. So this year, when the building's substantially complete, you're going to get a cutoff point, and then from there on, it's going to be an operational asset. Turning the page, please, Pamela. Yes, we'll go to the cash and we'll follow up Corbett's inquiry. If I remember correctly, those are amounts in the bank account at the end of the year in the two respective accounts. But especially the health plan reserve, it's got way more cash than it does in the reserve.
It's been overfunded for a number of years.
Okay, so yeah, that was where I was confused on. I misread. I read a different table. The note 9A and IA1 or AEI.
That's the amount. That's
like
a good point.
But this
that's the actual fund balance or equity. This is the cash, and that's why we noted that it's probably better to get the cash closer to what the fund balance or equity is.
Okay.
Like, it doesn't make sense to have 4 times the 1.6 million in the health plan reserve when it's $300,000 or $400,000.
Yeah.
And of course, as you'll know, the most recent payable for the 691,000 or whatever the number is exactly for the extra amount that has to be paid to Pacific Blue Cross, that hasn't actually come out of the bank account yet. You haven't even paid that. That's actually in liabilities. But of course, we still have to adjust down the reserve fund for it. So so there's where some of the discrepancies can sometimes occur as well, a little bit.
Good point.
But it has, as I've noted, it has been overfunded though for a few years. So.
Okay.
Which isn't a bad thing, but.
Yeah. And part of that would be interest earned in the fund that because your policy has never been to add the interest into, like, in the bank account to the reserve fund, that would be part of it as well, that interest has never been taken out of the bank account and put into the general fund for spending.
Because the way I would interpret it is that interest would be restricted to the purpose of that fund, so you wouldn't be able
to. That's usually the way it's done, but if there's not a policy for it, there's nothing to stop the interest to go into the general fund.
Yeah, and since there's been no actual policy specifically worded that way, it's never been added to it for the accounts into the reserve as far as like the net assets is concerned.
Yeah, we'll go through that in the audit findings letter, but that's a good point. Thank you. Note 4, accounts receivable, anything due from the government. There isn't any at the end of the year, but we break it out. There's no allowance for bad debts, which is good, or doubtful accounts. Note 5 is a brief highlight of the big items in the different funds for the prepaids. As we noted earlier, thanks, Pamela. The big item is the undergraduate health plan insurance premium because of the timing, the 1.621 million. Turning the page, you see the breakdown of the tangible capital assets that are on your books right now that you are in operation up to the end of September and will be currently. The leasehold interest in Maggie Benston, the computers, other furniture and equipment, and so on. And as we noted earlier, much of the leasehold interest in the building will be that net book value will get written off as if you sold it in this new fiscal year, and the 3.5 million will be proceeds as if you sold it, which in essence is what you've done. Carrying on, note 7, some disclosure on the intangible assets, nothing too out of the ordinary, cost, accumulated amortization, net book value. And then turning the page, please, to the breakdown of some of the major accounts payable, gives you a feel for what's in there. Again, the biggest item by far and away relates to build SFU, 5.159 million. and then the health plan premiums at 1.162 million. So here's, I think, Corbett, where you were referring to, where it is a bit confusing. Here's the actual fund balance or equity and the net transfer from the year to cover the two interfund transfers. It nets out to 562,882. So given though that's the final number, you can see in the perfect world that balance of 521,265 would have a bank account that would be pretty close to that.
Okay.
And it is a good point that both you and Pamela brought up that you should look at going down the line, that you should have a policy that any interest earned in those accounts should either go to the benefit of that account or not.
Yeah.
And it's the same as this future contingency reserve that got put in fiscal 2017. The number has just sort of sat there for the last 2-3 years. Eventually, you folks should give some thought whether you want to increase that or change it, and what you want to do with the interest also.
Okay, thank you.
Okay. Turning the page, more details on some other funds. I think those are all set out in the statement of financial position. And then the accessibility fund transfer, the 67,848 that you're going to pass a resolution to complete the second passenger elevator that will be in Build SFU. Now, note 10, these are the Student Society's revenue. You folks are in essence an agent for these other groups. And so the university collects those fees, sends them to you folks, and then you move them out to these 5 organizations.
Mm-hmm.
Note 11, brief description on the building renovation costs, nothing out of the ordinary. That number may change a bit. And then the commitments kind of go on and on. I think all the details are there. Probably the biggest numbers without a doubt are in 12G, the bank loans and the interest rate swap. So there's, as you know, 4 facilities and so on. But the moral of the story is there's a lot going on there. You've got your interest rate swaps and using the BAs, and that was probably a pretty shrewd move. And the good news is you're starting on a program to pay down the bank loan. Like you can see, $1 million on this part of at this point in time, and that term goes for 5 years overall, and then you'll have to renegotiate to carry on. Turning the page, the item that you, I'm sure you're all aware of, but note 12H got amended some back in 17. Originally, of course, you folks were going to be involved in the stadium. You're still going to be involved in the stadium. Who knows what will happen given what's going on with the COVID-19, but if things don't change, you know, it's going to be a $10 million hit over some years, and that's a big number.
Yeah, the stadium is actually progressing okay. They're a little bit delayed, but they might be finished by later fall. But yeah,
if you wanted to change that to maybe a more reasonable date.
Yeah, I can look into that.
I mean, it's not perfect. It's just to give your members and users of the statement a bit of an idea when it's going to be done.
Yeah.
Okay, and then of course you have construction commitments based on the normal course of construction. Related parties, because the executive board and other elected personnel are considered management, in the end, the board are the bosses, good or bad. So they're related parties by definition. A related party means a group or individual who can exert significant influence, and all these requirements of remuneration and so on are needed in note 13. It's quite lengthy, but I think it's good, transparent disclosure. And that's one of the reasons the Societies Act got changed back in November 2016 or whenever it was. Note 14, financial instruments, your various risks, credit risk. As we noted, your cash is, you know, as safe as you can get in this world at this point. You don't have much risk on receivables, but you do, of course, carry some interest rate risk on the next page with respect to changing interest rates, both on what you earn, but more so on your bank loan. Liquidity risk at this point in time, the Student Society's done a really good job. You can see that statement of financial position or balance sheet is pretty strong. And that probably was one of the real solid reasons you were able to do a pretty substantial deal with the bank back a few years ago. Note 14 talks a bit about the history of Build SFU and so on, and all the requirement disclosures. And then if we go to note 15, Pamela, down near the bottom, is October 1st still going to be, that's the extended date of the surrender right now. Is that correct?
Yes.
Okay. Do you think it'll be done by, you'll be out of there by October 1st?
No, latest report is substantial completion for the end of August, but it's been pushed up like by a week or two at a time. So far, that's the latest information.
Well, the good news is it's going to happen this year, it looks like.
Yeah.
And then turning to note 16, please. Also under the Societies Act, any employee paid more than $75,000 a year has to be general disclosure. There was 3 employees each year, and you can see those amounts. And remember, in fiscal 2019, the numbers included a buyout of the previous CEO. Note 17 talks about your Fraser International College agreement. Nothing out of the ordinary. Note 18, the closure of the copy center, and COVID-19. Now, we would recommend, I know you folks have been extremely busy. Speaking of COVID-19, you should review, those links we sent you, read the wage subsidies.
Yep.
Because it could be beneficial to you, but we'll leave that up to you. But if you have any questions, let us know.
Okay.
So then the last note 21, we thought it was good transparency, and it's a fairly big number. No one knows who gets what or whatever, but when there's a major change and a big amount paid out, hopefully this note is all right to everyone.
Yeah, that's fine by me.
Because again, as a student, they should know, remember what's going on with the structure and so on.
Yeah.
Now the schedules will just highlight a couple things because I know time is tight. Schedule 1 will be gone next year because, of course, the copy center closed, but we need the comparative numbers, nothing out of the ordinary. Schedule 2 has a little more detail. We'll just highlight some of the larger variations. So under the revenues for the general office, advertising and other, a little bit more in Rogue Media and Imaginus. You can see up to 11,300. And the food bank basically goes into revenue when the monies were spent. For whatever reason, this year there was less need for it or less claims for whatever you want to call it. So you can see 20,184 versus 29,000 last year up in the revenue. Most of the expenses are relatively comparable. The big variation finishing up in the GO is wages and benefits, 400,000 versus 256. But keep in mind, the 2 big changes were the copy center manager got moved into this category, I think this year, and you had a new finance manager for most of fiscal 20, and events coordinator was a full year also this year. The other big variations, there was more legal going on this year under admin and financial office, 61.8 versus 13.5. And you can see the other variation is placement fees this year. There is none, and last year was the placement fees for your CEO, the 44,589. And then turning the page, a couple variations, student engagement. I think a lot has been said and documented and reviewed, and rightfully so, on the one concert of the fall of 2019. We've made some points in the audit findings letter. We're not money for value auditors, but when it affects the numbers big time, and we all know it's great to have those types of events if possible, can bring students together and so on, but the Two big risks are typically revenue prediction is really tough. You don't know how many tickets you're going to sell or how many sponsors you're going to get. And of course, if you have higher end entertainment, they never come cheap, really expensive. The other variations, stipends and benefits are up a little bit more, but in fiscal 19, you had the president issue of impeachment and there was less non-executive student reps. The other numbers look relatively comparable. The Women's Center was less this year. I think the coordinator position was empty for about 3 months in fiscal 20. And out of campus, I think you had a full year coordinator this year and more part-time people, 73,000 to about 109. So that's the, hopefully that wasn't too fast. There's lots there. We tried to be as efficient as we could. As it sits now, the only issue from our point of view is if there's any material operating cost to be added to expense. We do have to ask you folks a few standard questions. You don't have any fraud that occurred during the year, subsequent to the year?
Not that we know of, no.
Okay. No lawsuits, disputes at the end of the year, subsequent to the year?
Nope.
Good. And no other major subsequent events have happened other than the ones we've talked about. Whoops.
Nope.
Sorry, I've lost. Oh, there.
Yeah.
Good. And so the other important matter to finish up on the statements, as I said earlier, these statements are yours. Our audit report is ours. And the good news, it's what we call clear, unqualified. So it indicates that we're able to do our audit in accordance with generally accepted auditing standards, and that the statements present fairly in all material respects in accordance with Canadian accounting standards for not-for-profit organizations. And that's very important for you folks, because if there was a qualification because we couldn't find documentation or it didn't follow the accepted accounting standard, that would be a concern or should be a concern for you folks. So any other questions, comments at this time?
Most of my stuff was related to the actual findings, but I can send an email off about that.
Do we have 5 minutes to scan it, or is that too tight, Corbett?
It's probably too tight because I need to do it quite a little bit prep to jump into the next meeting. But we can have a discussion with the group online and then send some group questions if necessary.
I mean, we'll just tell you quickly, we won't go into the details. We've talked about a couple of the points already. Generally speaking, I mean, given the COVID timing, we do want to thank Kurt and David, and of course, Corbett, you two, you guys were all phenomenal. It's more difficult to do a virtual audit, but I think everyone worked really hard and it all got done. It's a big entity, so thank you for that. Society has made some good changes in the past few years. A few more things to do, but thank you for everything on that. And if you want to go through anything more in detail on that, just send us an email or whatever, and we'll go through it.
Yeah, thank you.
Yeah,
So
I'll add my thanks to Kurt and David as well, and also Mark as well, who provided information, and then of course to you and Osab Corbett.
Sorry, Osab, I forgot about your great help too.
Very helpful during the audit. And and Rowena too. She provided information while she was there. So
Anyways, they've got to. I know you guys need a bit more time here, so if you don't need us or you need anything else, we'll sign off. Yeah. And next Friday, you'll let us know.
Sure.
About the final board meeting.
Yeah, I'll let you know on what's will be happening next week or so for board meetings.
No problem.
Yeah.
Well, thank you all. Thanks again, and have a good day. And take care.
Yeah, thank you for coming.
Thanks. Have a good day.
Okay.
Thanks,
Bye.
everybody. Bye.
Okay.
How do we get out of here there?
Okay, so yeah, that was a lot of information, and unfortunately, we don't have a lot of time today to go into it, but we can definitely have this conversation through Discord and through emails. And we can also have some follow-up meetings to go through stuff. So the next, for board members here, then the board will go through the same kind of presentation at our, hopefully more in depth in our dev session next week, which we'll have the auditors with us again. For the student at larges here, I'll try to reach out to you more directly and try to just work through the documents with you if you need any help or any questions, because it is a lot of information and there's a lot of backtracking, and a lot of times it helps having past documents or past audits to go through to compare, like, historical trends and things like that. So I'll do my best to support you and this, so that you find this committee as a very good learning experience. Is there any last minute things people wanted to bring up or questions? Because we've got about 3 or 4 minutes left. Seeing nothing, I'll call this meeting adjourned, or move to adjourn the meeting at 10:56. Do I have a mover?
Jennifer moves.
Thank you. And seconder?
Harry, second.
All in favor of adjourning the meeting? Seeing no negative nays, that carries. Thank you for everyone for coming out, and I hope you have a great weekend. And some of you I'll see you at the board meeting later today.
Thank you. You too.
Have a good one.
Thanks, Robert. See you.